All right, all you devils out there, happy Friday. Sam here with you. Well, let's see, it's about 1:15 for me on the 22nd of March. I have some news I'm excited to bring to you after a very long, what do we call it, incubation period, as we changed it, tweaked it, modified it, rewrote it, re-recorded it. Long process to get the brown belt completed, but I'm very proud of it, and that is now available, and we're launching that. I would call this maybe a soft launch. There'll be some promotion. We're going to try and grab some video highlights from it and just kind of give you a taste of it. Just in conjunction with our March Madness sale that'll be going on for the next, 7-8 days. But discounts on everything, right? So if you've ever considered investing in any of our product, any of our education here, this would be a particularly good time to do it. All the belts are at half price, right? So this brown belt, I spent 6 months working on it. It's only $199. You get the whole belt system for $499. The pro monthly membership $49, and if you wanted to do a year on that, $539. So pretty good discounting. Now the brown belt, I don't want to take this whole video here to go through it, but essentially what I've done here is take all of the material we covered in. Let's get over here to Bitcoin. All the material we covered in blue and purple, which were really foundational Elliott knowledge, and then based on just the popularity of it, I've never seen anything like it in technical analysis. The dominance of the SMC, smart money concepts, ICT's work just completely dominates technical analysis. So, over the last several years, they started to get popularity in 2020. So over the last 4 years, I've watched people gravitate to it. As an educator, of course, I've got to pay attention to what the market is interested in. And I just kept looking at it, going, in no way does this conflict with Elliott Wave. As a matter of fact, all it does is make the Elliott Wave more powerful. Or let me say that differently. What it does is it adds. If you think of Elliott Wave as the skeletal, this is the analogy I've been using, and in fact I use this in the course. Here we can just. I'll just pop it up here. I got 2 counts for us today. If you think of the Elliott count, the price action, as the skeletal structure, it's structure mapping, right? So the SMC community would call it structure mapping. Well, as you've heard me say before, Elliott and Elliott labeling, Elliott's the OG of structure mapping, right? If you're mapping out an account, you're structure mapping. So that concept is certainly nothing new. But if you think of it that way, with the labeling, the swing structure being the skeletal structure, what the smart money concepts is doing is it's adding the flesh and the blood and the bones and the tissue and the ligaments and the organs and all of the detail that really brings the Elliott count to life, if I can stretch that analogy a little further. So I think what you'd find is that at those moments where the Elliott is conflicted or confusing or unclear, that by bringing in the SMC concepts, it's giving you additional benefit here to make better decisions. So again, I don't want to go off on a long session here about that, but I'll be dropping in little nuggets. We're going to try and pull some parts of it out. But I think anyone who's either struggled with Elliott Wave or perhaps struggled with SMC, I think this might be just the content you're looking for. The brown belt, you can purchase that by itself. It does not require extensive Elliott knowledge, right? Because I don't really go into great detail. But if you had a basic framework knowledge of the essentially 5s and 3s, it's all Elliott is, if you break it down. Now, I'm simplifying there, of course, right? But if you have a basic understanding of wave structure and wave relationships, then adding the SMC, which is what we're doing in the brown belt, I think would do nothing but, I think, bring your charts to life, if I say it that way. Right? We go from skeletal to full flesh and blood. So, all right, with that said, just so you know, right, TradeDevils.com, come over here. You can dig into some of this if you're interested. And of course, as I have said for 5 years, the best way to approach our content is to join the Discord, right? It's free to join. Dig around, ask some people. Right? Never take my word for it, or any, I don't know if you're going to call me a promoter. I'm not much of a promoter. But don't take my word for it. Ask the other members. What's the value like? What's the experience like in here? How the senseis, right? You'll interact with the senseis likely more than you'll interact with me, because they're in there nonstop all day, every day. Right? I'm running 2 businesses and teaching and trading and you'll interact with them. So get a feel for the experience in the Discord community. Right? That's where you're going to take the knowledge from the belt system, apply it, and interact. I think that would be the way to start, right? And you can always just do that for free. All right, so with that, look for more material on the brown belt. There'll probably be some emails going out over the weekend as well, just to promote the fact that it's available, and two, we're doing some pretty aggressive discounting, right? So that'll be going through, I think through the 31st of March. All right, so let's get over to Bitcoin. Now, what I've done here, okay, right? So if you're long Bitcoin, right, it's just human nature, right? It starts to come down. You're like, I wanted it to just go straight forever. Well, with the exception of maybe NVIDIA, there's not much that does that. But what I do, and this is just a good habit to get in. Okay, so we've been tracking since the low down here in November of 22. So for 18 months, damn near, you lock into a count. Well, it can be a good habit to every now and then just strip it bare and start over and say, now if I was looking at this chart for the first time today, would I come to the same conclusions? Because we get so caught up into, we're expecting this explosive movement. Careful, right? So the one of the beautiful things about Elliott Wave is that it will hold you back from being overly enthusiastic if you're disciplined about your market structure or your labeling, or if we want to call it structure mapping, your Elliott structure mapping. Well, if you go through and take the time, right, because it takes time to work through all your impulses and corrections and all the scenarios here. Careful, right? So that bullish bias, and I'm in many ways talking to myself, that my bullish enthusiasm here can color my counts. So I try and check myself occasionally and just say, wait a second. Are we absolutely rock solid on this count, right? Is there an alternate that we want to consider? So I would not call what I'm about to show you a bearish count, but perhaps a count that's leaning a bit more on more traditional, typical, if that's such a thing, more typical wave relationships. Because this, now here, note, I'm out of log scale. Now, do we need to be in log scale, right? I get asked this a lot, right? This is just inherent with Elliott Wave. Oh shit, any TA, right? Okay, well, if I've got a low here of 15,000, I've got a high of 73,000. It's kind of a guideline would be minimum 3 times the range, right? If you're at 4 times the range, you pretty much have to look at it in log scale, right? To get some perspective. Now, but that said, there are times when you're measuring wavelengths, right? We got to look, if you're in log scale and I say, oh shit, well, 3 is shorter, I can't. Longer's longer, right? So when you're measuring wave structure here and you're doing your structure mapping with your Elliott hat on, be sure you don't discount a count because you're in log scale. Like, oh, well, that can't be the 3 because it's not longer. Longer is longer, right? So you've got to kind of go back and forth and check your measuring in both, I would tell you. So here, as we sit in arithmetic, looking from 15 to 75, it's more than 4 times the range. So, but okay, let's just keep it here. Now, of course, there are advantages with software like this to staying in algorithmic because I don't get the distortion that comes from logarithmic, right? You've seen me. I love to use a regression channel. Can't do that with in log scale. So as we sit here, this seems to be the most agreed to count. That we've come off the low here, that we've got a 1 and we go sideways into a 2, and then here, so you look here and you go, well, I don't want that to be the 3. Well, could it be the 3, right? That's the first question you got to ask yourself. Well, if this is the 1 and that's the 2, and I stay in arithmetic, well, I mean, it's long enough. This could be the 3. There's a little bit of sense of like, oh, really? Bitcoin coming off the low, the 3 is only barely going to make the 127? Well, I'm not saying that this count is inaccurate. I'm just saying let's consider the alternative here. This is the count that seems to be most consensus, right, amongst Elliotticians. Not that I check every Elliottician, but amongst my Elliott wizards, right, who there's no reason to go beyond them. 1, 2, 1, 2. 3, 4, 5, right? So the implication here is we're still seeking the 3 off of this 1, 2. Now, again, if we're measuring, we're talking about well, here's 2, 6, 1, 8. We're talking about up here 3, 4, 6, 1, 8. Big ripper. Okay, this is Bitcoin, right? So that doesn't disqualify it if we're going to have this monster ripper in the third off of the 1, 2. And you can certainly, right, understand, right, when you look, that's why I like to do it this way. Cause, effect. Accumulate, 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 boom. Okay. Well, if it's 1, 2, and we're still seeking the 3, well, this measurement here is relative to the internal 1, 2. So if I've got a clear impulse here, can't argue with that, certainly not corrective. So if this is the 2 off of the initial first low, 1, 2, 1, oh, what am I doing here? Some sort of a expanded B into a C, right? You could probably count that a couple of different ways, but at the end of the day, it's 3. That's really all we care about at this point. It's a 3, period, right? You want to make it a WXY, fine, right? It's a 3. And then what comes off of it? Or just a ripping impulse. And it would appear with a kicker in the 5th. Okay, it's nothing unusual, right? That would certainly be logical for something like Bitcoin. Additionally, since we had the ETF news, right? All just perfectly logical. Okay, on the retrace, if this is my 2, if it's 1, 2, and I'm in the retrace here, well, I'm retracing right in the pocket, right where I would look for it between 23 and 38. It's perfect. I got a little imbalance here, a little fair value gap, and bringing in some SMC here. I've got a little imbalance here. 3. Now, okay, no, we don't have to stop here, right? The market is under no obligation ever to do anything, right? This is our attempting to organize the chaos, right? If something like this for an ABC. Remember, I've got something a little wacky here, but you would essentially call this a sideways correction, right? So we'd go sideways sharp. That would be the guideline of alternation, right? It's not a rule, guideline. So maybe I get a zigzag here, or something sharp. It could be a double. It doesn't matter, right? But I'm looking for 3 that's sharp and retraces into the pocket here. I've got all this imbalance to deal with. Right now, as we know, and again, pulling from the SMC, the handbag of tricks, and well, I shouldn't call them tricks. But again, this is ICT's really, I think, his contribution to TA, right? Is identifying what the algorithms are doing, right? That's really what his contribution is, how the algorithms are acting. So one of the premises of the entire SMC concept is that the algorithms are only ever doing one of 2 things. They're either seeking liquidity, which they're going to do at pivots, or they're rebalancing something like a fair value gap, right? It's an imbalance in the market, so the algo is seeking to rebalance those, right? The point is that's why we call it a fair value gap, right? We don't have fair value there because one side can't participate. So we're coming back to rebalance that. Right, and that is truly, I mean, that has certainly influenced my thinking as I approach the markets, and we have to give him credit for that. He's the one really who promoted that, advocates it. Now, there's a lot of baggage that goes along with ICT, and not to get into that, but we can certainly just isolate his contributions to technical analysis, right? And they are not insignificant. I mean, as far as I'm concerned, he's the most influential technician of the last 100 years. There's no one even close. Not even a close second. Elliott, not even close. Not even close. Dominates TA. So we have to give him credit for that. So thus the brown belt is showing, essentially, you're kind of seeing it here, without all of the details that goes beyond just the most rudimentary SMC that I'm putting in here, right? We go into great detail there so that you can use the 2. But at no point would ever, if you're applying SMC, would you take your Elliott hat completely off and just go, well, I mean, if you're structure mapping, not too hard to put a 1 or a 2 on it. Right? That's the only difference, right? You're labeling it. Oh, is that a 5? Well, why would I not call it a 5? Oh, because I'm only SMC, right? So I'm not going to call it an impulse. Or I'm not going to, here's what, sadly, this is what many in the SMC community do. They'll see a perfect 5 and they'll call it an impulse, but they won't label it, right? Oh, no. I'm not an Elliott trader, right? So I'm not going to label it. Really? We're not going to call that an impulse, right? Again, I'm just getting sidetracked. Okay, well, so this is the agreed to count amongst most Elliotticians. One, unusual. Two. Well, if you really look at that, if you were just, again, if it wasn't Bitcoin and you're sitting right here, wouldn't your thought be, God, that is much more like a wave 4. That price action is much more like a wave 4. Well, if that were the case, is there a count here that would support that? Right? If we're going to have an alternate, which is one of the kind of built into the thinking of Elliott Wave, is there an alternate here? Well, now I'm in log scale. Okay, so let's back this up, right? So one of the things that often, right, over many years of doing this and showing the measured move algo that we can thank David Halsey for, from his tremendous book, right, Trading the Measured Move. That's where I got all this. All I did, the only thing that I added to it was the 65. So I think we're, I actually have reached the point where I feel guilty showing this. Like, oh my, come on, dude, not this again. But there's new people, new subs, new members, right? If you don't know this, I mean, I don't know how anybody could ever see any of the videos I've done here and then not include this. It just seems, how could you possibly not include it, right? So let's just back up for a second here. So off of the, just to demonstrate this, because often you'll hear me say, well, Bitcoin loves the golden zone. Well, it does. It does love the golden zone, but it certainly responds at the 50. Let's just take a peek here. Now I'm on the daily, right? And I'm in log scale. So COVID low. Well, you'll note here in the COVID low, right? From this low, there's not a 50 the entire way until we do this. There's not a 50% retracement anywhere. That's a 38. Now, if you went down to a smaller time frame, right, you're going to find 50s, right? But on the daily, if we think about the swing structure, you don't get one until here. So the whole time this is popping from 3,000 to 69,000, you're like, oh, come on, give me a 50, give me a 50, give me a 50. Right, what was the general consensus here? When all it was doing exactly what you might have anticipated it was doing. I know, right? It's always easy in hindsight. But at this point in time, with the FTX collapse and everything else, and all the COVID, everything else, it was like crypto's over. It is over. When all we did was make a 50% retracement. So, the hardcore, and I would put myself in that category, hardcore bulls. While this was, I won't say I wasn't concerned. You had to kind of step back and look at the chart and go, why am I so concerned, right? That's media. That's crypto. Was it Twitter? I guess it was crypto Twitter still back then. It's what's in your news feed. It's what just the general sentiment in the market could not have been any more bearish right here. See. That's the thing that makes it hard, right? So you look in hindsight, you look at this and go, what the fuck? What was the big deal here? We just did a 50% retracement. How many of you bought that? I'm not saying I was here, with deep pockets buying that. I'm just saying you have to, there's something that happens to you as a technician, right? So you study and study and study until you learn, you dig, you study another video, another book, another study, more back testing. And then when it comes to exactly where you think, God, well, shit, that's where it usually goes, you're uncomfortable pulling the trigger. Because all of that negative sentiment, all of the, oh my God, the FTX, oh my God, right? It takes hold. And then now this is not FOMO. This is just fear of being in. Not of missing out. Now, where do we have FOMO? Well, I guess it's safe to buy Bitcoin now. As we've swept the high. No, it's not safe. Well, let me get back to where I started. Swing high 50. Well, let's just dig in here for a second. If this is, you could count this a couple of different ways, but this is the more conservative count. If I go up for the 3 and come back to 50, here's the target. So from this swing low, since we know they used it, right? So that you always want to try and work with the pivots, right? And you don't have to wonder which one did they use. Oh, fuck, did they use this? We don't have to wonder. We know what they used. Okay, from here to here, what happens? 50. I actually got a double bottom on the 50. 50, 50, 50, 50. Now, if this is not 1, 2, it's much more likely to be 3, 4. Where's the high probability for a 4 between 23 and 38? And all I'm doing is just filling a little imbalance. Hello, Mr. Algo. 23. Perfect location for a 4. But see, we don't like that because we're like, that can't be the 3. Can it? Well, if you look at that, right, so I do this a lot, right? So this is part of right look, right? Do we have the right look? Do we have the right look? Right? It doesn't feel like, oh, the 3 should be bigger, right? So that's what's in. Well, every Elliottician is looking at that going, oh, that can't be the 3. Can it? Well, if you measure here, right? So if you say, okay, well, if that's the 1, this is the 2. If I'm in log scale, oh, we're not even to the 100. But remember, that's log scale. Here, if it's out of log scale, I'm right to the 127. So it's longer is longer. It's definitely long enough to be the 3. If I do it this way, well, now I'm just a little bit beyond the 23, and I've got this kicker here, right? So slow down a little bit. I'm not so sure that's bad news. Let's go back to log, right? Because again, as I started from 15 to 74, you got to at least look at it in log scale. But you know what I'm doing here? I'm just going back and forth between log and algo or algorithmic, just to is this clouding my judgment? Well, I'm not so sure that that this is bad news, because if here, let me get this off of here. If indeed we've completed here, that's not bad news. It makes the retracement. If indeed, now let's just think for a second. Let's get all this off here. Oh shit, let's hide it. Oh, here, that's right. Let's get this off. If we completed here, as opposed to 1, 2, 1, 2. Okay, well, there's more upside in this last leg, but if we're retracing, right? So you look at it here and you go, oh, is that really? That's going to be the 3? The retracement will be more shallow. I mean, if I think about a 50, if we think golden zone, right, which is what you'd be anticipating, right? If we're done, if we're done, okay, I get a 33 is my 50, and I just showed you how it seems to like the 50. So if it's 1, 2, 1, 2. Okay, but let's not be absolutely, completely floored if we get something like this. Oh, I suppose it'd probably be more like this. Let's not let that completely crush us. In the same way that we now in hindsight, that was completely crushing the market. The sentiment, again, was crypto's dead. Now, are we going to do the same thing here? Oh, fuck, crypto's dead. ETFs have launched and we're back to 33. Oh, crypto's dead. Over. Just something to think about, right? So it's a good idea to have the alternate counts there, just to, and really all I've done is algo log, or I should say algorithmic or log, right? Or are we about to just repeat the same cycle there? I know, right? It's not, if we go over here, this is what people are leaning into. Okay. Well, then 4 or 5, right? There's another leg here, and then there's another leg here, and another leg here. But if that completes, well, let's just compare it, right? If that completes up here, it's okay. It's not necessarily bad news, right? We'd be retracing here. For the if this is going to complete up here for the 5, actually we get a better fit here. Let's draw it out. Right? Does this look better? Yeah, it does. Right? It looks better. That's more typical. So I'm not trying to rain on anyone's parade. I'm just trying to say, let's not be surprised if the market starts to come down here and just does a retracement. And again, this is kind of a, we're guessing up here. So until we have it, right? This is you're just kind of doing a roadmap, right? For all we know, we'll pivot right here. And I got something else, right? So just something to think about. I think what that ultimately the difference is I misspoke there a little bit. If we're done here, what it means is that the 3 will be bigger. If this is the 2, then we're going to get a 3 up here, right? Our 3 will be way up here, right? There's 360, 350 grand, right? It's not the 2 that will be better. It's the 3 that will be better. We look at that. Let's compare it here, right? So we're trying to complete the 3, 4, 5. So the 3 if it completes here, as opposed to the 3 that completes here. It would be the 5 up here at 110. This would be the 3 at 370. All right, so the upside is better, so I apologize. Oh God, have you ever been so busy you couldn't actually function because you're so trying to do so many things at once? That's kind of what's going on with me. You know, people say, oh, you started a trade company, you probably trade all the time. I trade so much less than I used to because I started a trading company, actually 2 of them. Okay, so I think we're clear on Bitcoin. I'm just keep this one somewhere so you're not blindsided and you're not thinking, oh, crypto's over. If we just do a very typical retracement to a 50 or a golden zone, 33.27. I know the whole market would be in an absolute panic if we went down to 33 or 27, but it would be very typical. Just like this was very typical. Okay, that's probably enough of that. Let me move on to ETH. So hang on a sec. Okay, ETH. Now I think ETH, it's a little more clear cut. There are fewer options. I don't think we have to make a distinction here. If we in and out of log 1 2 1 2 stays the same, because you wouldn't think 1 2 3 here, right? And that's kind of the consolidation before the launch in Bitcoin. So we can stay. I mean, we're going from 800 to 4,200. So certainly we've got the range that would support looking at this in log scale. 1 2 1 2. It's not, you don't have a lot of choices here. 1 2 1 2, right? It's I know you kind of choke on it a little bit. That's too many 1 2s, but let's dig in there, see if we can make sense of it. I think this is one of the more challenging counts, with the exception of the one I'm going to finish with, which is Ripple, which is, I'm going to show you the work of one of my master senseis. It's literally, if you're into chart art, this is a masterpiece. Okay, so off of the 2 low here. Now all I've done is just this anchored VWAP. Right, just okay. Well, did pretty well here, right, as we come. So this sideways consolidation. Well, again, we can look at it a couple of different ways, right? So the labeling is tricky. Oh, let's probably change that to labeling. Gets a little tricky here. 1 2 1 2. You don't have a lot of choices. I mean, this is where there's a possibility that we're overcounting. As in, oh shit, can we even do it? See, this is clear. So this is a 4, this is a 4. So you've got the internal 4 of the 3, 4 of the, before we go into the 5. So it's tricky to think here, but the more conservative thought would be that this is some sort of 3 in this fashion, which would be closer to what Bitcoin did. But there is a WXY, and this is, you can get an impulse in here, and you can get an ABC in here, although it's butt ugly. You can work this. So 1 2 1 2 1 2. Already, right? It's too many. So, but okay. Labeling market structure here it's a snapshot, right? Whether it's SMC or Elliott Wave, it's a snapshot in time. Okay, right now this is not unreasonable. Can we say with conviction, oh, it's definitely that? No, we can't. We don't know if we're going to, if there's certainly the possibility there's 1 too many 1 2s. And if that were the case, then you would do it like, well, you would do the 1 2 here, and you would not have this 1 2. This would all be the 3. Excuse me. Hang on. Oh, these allergies. This would all be the 1. This would be 1 2, and this would be the 3 relative to this 1. No, that's not crazy town. If this is the 2. Okay, well, again, 1 2 7 1 3 8. We're not getting the 1 6 1 8s, which is why you might pause there for a second, because if I measure it the other way, if this is the 1 2, right, and these measurements, right, can influence your thinking. Okay, well, now here I'm all the way up to the 2 7 2. I didn't quite make 2 6 1 8 log scale, but it makes the 3 seem to fit a little bit better there if it's 1 2. All right, I know we're kind of reviewing things that we've been over before, but the whole process as a technician is to check, recheck, and then analyze, and then try and poke holes in it. Okay, what's wrong with this count? Well, right here, it's consolidation, right? So, and then there's the fake break, and then the retrace. This is the classic breakout traders getting bent over. Well, you don't do it, but okay, right? So you can learn from me or learn the hard way. This is the consolidation. This is the This is the cause. This is the effect, right? We consolidate here. Do we need more liquidity? Oh, well, we're going to go get more liquidity. Now we go. Now this count as we get up here, oh, this gets really tricky. Oh, let's go to a 1 hour. I mean, the SMC is even not a lot of help here. So I've got a 1, 2, 1, 2. It's somewhere in here, these little consolidations, right? So that's how we can usually spot a 4. It's the trend just stalls. We consolidate before we're going to go, right? And the market makes a decision. Are we going higher or are we going down, right? Because you could probably count this to be done here. 1, 2, 3, 4. You could be done here. The 3 could be here. The 4 could be here. You might have been thinking, oh, we're done. Well, it keeps going, so now you got to work backwards. Okay, where are the 3s and the 4s, right? This is likely the internal 3, 4 before we go up for the 5 of the 3. Then we got to work backwards. So this is 1, 2. This is another potential 3, 4. But you kind of got to work backwards. Okay, so 1, 2, right? It looks like you got to do it. You got to do it over here because this looks like 3, 3, 3. So little running flat. Okay. I mean, it's tempting to put it here. I don't know that it would matter that much. So this would have to be 1, 2, but that looks like triangle. So then you think, oh, I got to put it up here. Okay, so 1, 2, this is clearly a triangle. So how am I getting out of here? Well, this is where it gets really difficult if you're structure mapping with your Elliott Wave hat on. What do we do with this monster right here? This is the monkey in the wrench right there. We got this big just sell-off wick. Oh shit! What that will destroy your thinking. So there it is, right? So we can't just go, oh well, that's inconvenient. So we got to deal with it. So how do we deal with it? Well, it's amazing as it may sound. There's very, very, very few chart price action sections where you can't get an Elliott count that's valid. Now it may be wacky, and this is borderline wacky, but you can almost always get a count there, unless it's just incomplete, right? And you just need more price action in the market to reveal a bit more. This looks to me, because this looks like a clear 4, that we go up, and then we have this massive wick retracement. Well, as this would likely not surprise you. But if I pull from the 4 low here, and I look sort of on the premise that I've got a completed impulse here. So the impulse is right here, right? So we go, oh, fuck me. We go right here. 1, 2, 3, 4, 5, right? There's my impulse, right? It's a little funky, right, with the triangle here, but when in doubt, oh, what the fuck, triangle, all right? So there's the potential impulse. Well, if I've completed an impulse, what's my next thought? Oh, retrace. Do I even need to do it? I get right on it. Right on that pivot. Look what we do right there. If you're surprised by that, that's got to be 50,012 times I've shown that. You haven't been paying attention. Now, by the way, from the golden zone, look where we go. Right? Where's the target right here? Clears it by a tick. How do we know it's an algo? Right? It's not here. It's here. What happens at the target? There's your friend Al right there in action, right in front of your face, right? Now, when this was coming down, you saw that golden zone. How many were really comfortable buying that? Well, not many, right? I don't know that I would, right? So the idea is you'd say, oh, give me the reaction, then give me the retrace. Well, we didn't get much of a retrace, right? So that makes that difficult to trade, right? We don't have, that's all we got in a 1, 2. But it does look like you've got an impulse here, as wacky as it is. 1, 2, 3, this has got to be the 4. A, B, C, oh, fuck, it actually looks like a triangle. A, B, C, D, E into the 4, and then we get this last little squirt up for the 5. Oh, shit. Well, what is that? Well, that's not going to be 3, 4, 5. It's just the spread of time is too much. So down for the perfect tick to tick measured move. Okay, well, what is it? Well, it's a, if I'm on a 1 hour here, you have to go down to 5 to try and get that into a 3. But there are times where you've just got to go with, okay, of all the things that could be, more probable that I've got to come off of this with an ABC. So I've got an impulse here. I've got a 3 into a B, and then it is a tiny one, but there is a little impulse that goes up there. So I've got an ABC right here. Well, if this is a W, here's my X. Now, part of what we're doing here is we're working backwards, which is very typical for an Elliottician. We're working backwards. Okay, well, I can see I've got a completed impulse right here. Okay, well, where am I? Oh, shit. If if this is the 3, then this is the expanded X in this case, right? If you were thinking A, B. This is expanded. So with my Elliott hat on, I want to pull from the proposed, what I'm proposing is the pivot high of the 3. Well, there's the 38. So 3, 4 relative to this 2, right? So from this pulling up, now let's pull back for a second. Relative to this 1, 2, look at the channeling, right? Here's the 3. Here's the 1, 2. I mean, I can get them slightly tighter here, but this might actually come up a little bit. Actually, it might be spot on right there. So I'm ticking, again, a couple of things put together, right? So I have unmitigated price action here. If you think of it as just a band zone before we launch. Okay, so we're coming back to the edge of this, right to the edge of it, ticking it as I hit the channel, right? So geometry is so critical, right? So critical to the Elliottician in terms of identifying the impulse, right? If indeed we're going to hold with an impulse. 3, 4. So this would be W, X, Y. So I can go A, B, C because I've got a perfect zigzag that ends it. So could we be done here? Well, I don't get the most beautiful impulse coming off the low, but it's valid. I mean, it's iffy. Granted, let's go to a 30, see if it shapes up any better. 1, 2, 3, 4. That's all I got. Well, would you call it corrective? If we roll over here, very likely we'd be back here calling into this. Maybe you dig a 1, 2 out of something down here, and you're going to go A, B, C. It remains to be seen. But right now, there's no reason to think otherwise because of everything that backed us into a proposed pivot right here. Everything we just went through to get us right here, to get us to at that 38, at this mitigation zone here, I should say, pardon me, at a demand zone. Let's just keep it simple. At a demand zone here, and I can make a case for a 5. I'd be reluctant to go too heavy here because that's such a shitty 5, right? But okay, there we are, back to the 50, and I've got a big. This wick reaction down here. So if we roll over again, okay, well, all right, what would that look like? Let's go down to a 15. Well, that looks like 4-ish, right? You don't really have much 1, 2, but this little consolidation would make you think that it's something along these lines. Some little 1, 2 is in there. 3, some sort of consolidation. 4 before we push down again. And that's where you might be looking for along here. So A, B, C. So this would be, if we finish the labeling, 1, 2, 3, 4, 5. Let's go to something. Oh, Jesus, I can get that. It does that to me all the time. Okay, hang on. Let's get a white in there. Okay, so white, ABC, candidate. If I get it, right here, I've already got it. If I come golden zone, golden corner, targets above. Put it all the way up here. So do you want to buy it there? Well, I mean, look at it, right? It's not, it hasn't done anything. It hasn't done anything to make it worthwhile. So I've got, there's a little fair value gap here. Oh shit, do I have that on? Thought I did. This is all one single leg here. So until, first thing we have to do is we have to break this pivot, right? So we can't confirm the low until we break the last pullback high. Right? This is all one move down, right? So here's the first retrace. So if we go here and we keep going down, we haven't swept anything. So we don't know that we have a good low here. We need to sweep this pivot, right? The last retracement before we went down. Now we held here. So where are we going? Well, I wouldn't buy this just until if I were looking at this. Here, let's do it this way. I'd want to see it come up here, sweep that high, and then come back. Right? Let's pick up any stragglers, and then perhaps it can go. That's not a buying pattern right there. Well, but number one, right? I've got internal structure here. I've got a lower low, and up here I've got my high. So I've done nothing here. I mean, this could be a triangle: A, B, C, D, E. We don't know what that's going to be, and I don't have this yet. I could do it here, but does that look like 1, 2? Okay, well then I better get something really, really aggressive coming out of that. Looks more like a 4. Do I have a 2 here? 1, 2. I don't really have one. That looks like the 3, 4 of the internal. If I got a 1, 2, it's not going to be my 2, right? So it's just straight down. You don't really have a good retrace there, so it leaves you a little bit. Oh, I needed another swing there. So the point there being, don't force it. Don't force it. There's no reason, right? If it goes, it's likely there'll be some sort of retracement here. If we're going to go up here and sweep this high, oh, okay, well then now it looks a whole lot better, right? So give me this first before I just start, because what am I doing here? I'm just rolling dice here. This is just roll the dice. No, shit, decent plot. Let's just see if it goes. I'm not saying there's anything wrong with that at times, right? If you're looking for, I mean, we've come off of what, 3,500 and we're at 3,200. You know, if it's game on and we're just going higher, are you dicking around over 3,300, 3,200? I mean, what's your time horizon? Are you trading with leverage, right? I mean, that's just not particularly attractive entry pattern. It's consolidation. So we look there and say, well, one thing we know, right? So from consolidation, we can say this with absolute certainty. From consolidation comes expansion. What do I have below? I'm in a squeeze now, right? Black is the squeeze. Right? Is this just part of the ABC? Okay, let me pause there and then we'll finish up on Ripple. Okay, so I've got a couple of other alts here that I want to look at, but this video is already running kind of long, so I'm going to break them up into 2 different videos, so you can look for another one. After this, it'll just focus on, I've got 2 alts. We're going to look at Dusk and FET, right? So we'll look at those in a second, but I'm already at 41 minutes here. Okay, so I consider this some of the best Elliott work I've ever seen. This is entirely due to one of my senseis. It's Sensei PK. Many of you know him. He's a level 3 master Elliottian, one of the best traders and technicians I've ever seen. And he's my go-to guy when I'm going, oh, God, what the hell have I got here? He's the guy I go to. And so I asked him about Ripple this morning, and this is what I got back. This is just remarkable work. So all of it is to get us to a 1-up here, but it's with all that the volatile swing structure and wicks, like to get something here that's valid and that sticks to rules and guidelines. Just remarkable. So 1, 2, 3, 4, and then up to the 5. So it's a leading diag, but this section here is just brutal to try and get a decent count on. This very few Elliotticians would give you this. 1, 2, 3, 4. Now I got to do this. Here's how I have to do this. So from the 4, I'm going to go A, B, and then I'm going to go all the way up here into a 1, 2, 3, 4, 5 to give me my C for my W, right? So you'd be thinking, oh, 5, right? Which at this moment in time, that would have been your thought. Oh, now we're starting again. But with all of this price action, you have to come back. And that's not uncommon for any technician. Oh, well, okay, I've got new information here. How do I make this fit in? Well, if it's not going to be 5 here, right, which would have been your first thought would have been like, oh, the 1's here. Oh, we're in 1, 2, 3, 4, 5. What's difficult? Okay, well, how are we dealing with this? So since we get another leg here, how do we work backwards, right? That's what he's done here. So we're working backwards here. Do I have an ABC to get me there? Well, just looking at it, pretty hard not to see this as a 3. Right, so there it is. Now, how did we do it? How did he get it? 1, 2, 3, 4, 5. Leading diag, contracting diag into the A. WX, Y into the B. And then just a straight moonshot for the C. W, X, Y to give me the 5, 3, 4, 5 of the 1. Okay, well, now I start coming down. Well, it seems to be consistent with Ripple. We're going to have very challenging price action and very wicky, right? It's hypersensitive. So ABC into a W looks like ABC into an X, and it looks like I've come down A. I've got a little 3 into a B. It would look like there's one more leg down here. Ideally, you might see it sweep these lows that are all sitting down here just as liquidity. This is all just liquidity down here, whether we however we want to call that, right? This is just sitting there waiting to be swept, right? So these wicks that are down here, and then I pull this over here from that. That's the highest, the close here of that first little swing. So I've got this coming in right in line with all of this. Now, here's where the SMC might come in play to be useful. Okay, so I'm going to just put on here is one that we like. There's a couple that I recommend. This is Sonar Labs, right? We worked with them forever. So number one, note here, I've got this demand zone here that has been wicked through a couple of times, but now we've come back here and it seems to hold here on this reaction. So wick, hold. Iffy, right? So ideally, right, you wouldn't see them breaking. As you see this one down here, holds. So if we're going to come back down here, well, then if I dig in here a little bit further, well, there's the if I do it this way, come here, right? So if I go from my swing high up here to my swing low, okay, well here, where's my swing? Well, here it is, right here. Here's my swing low because it's all wick here. Well, there's my 50. So I've got my discount, my premium. Do I want to be selling or buying here? I know, not to be a smart ass, but okay, we're in the discount. So more an area to be a buyer. Now, if we come down lower to the proposed wave C here, all right, it's just all the better. Right, so this would move if we got a new low down here. Right now, it's using this as the swing low. Right, it's using this because all of this wick action down here isn't holding. All right, so we have this big reaction here. So here's the 50. So we can frame the range here. Here's it's very nice that it draws a little volume profile of the range. And we see the POC is kind of right where we're sitting. I got imbalances above. So A, B coming down for the C into this pocket of previous, well, it was resistance, and then it's kind of wicky support. I don't know that I would be putting a whole lot of conviction into this holding. But I've got the ingredients here, so you got to fill the story out. Okay, so I've got liquidity available down here, so the algo can look here and go, oh, well, if I need to reload, that's a good spot for it. Think of it as a watering hole. Oh, the canteen's a little empty. Let's go refill. I got more down here, right? In fact, one of the things that's nice about Sonar Labs is that it'll tell you where the liquidity is. Well, I mean, it's not too hard to spot it, right? Would that be liquidity up here? Yeah. Liquidity, all of this, right, is all potential liquidity, sell side liquidity. So if they want to do that, what's the thinking? Sweep, go. Sweep and go. That's where remember, if they want to take it higher, they have to have someone to buy it from. Right? So all down here is a bunch of sell stops, right? So those are sells, right? They can grab all of that and then take it up. That's if right? They being the wicked people on the other side of your trade. Those wicked people, they're just people. Well, I should back up on that. They're people that wrote algorithms, right? There's very few people actually trading other than you and me. But when we get to the BIFs, they're letting the software do it. Difficult, very difficult, right? Just a great demonstration of with enough skill and experience and knowledge. Even something as crazy as that. See, if I brought that up blank, I'd probably, oh, Jesus, I'll wait. But he nailed it. Absolutely just beautiful work. Okay, hang on a sec. All right, I'll just finish up here. Just a reminder here in this little, I'm not a hardcore promoter. I think anyone who's a regular sub would tell you that. I'm not promoting all the time. And we don't do a lot of sales. So this one is significant for us. And really, I think you'll find that this will really tie the whites. This is just kind of an intro to TA. These are dense. I think this is great education for anyone interested in the components of our trading methodology here. This really dials in on the 3 or 4 majors, and then we bring all the SMC in to put the whole thing together here in brown. As to whether or not we get to black, well, let's see how we do with brown. Let's see how this is received by the marketplace. But I do think for 199, as we're here, I would be very surprised if people didn't feel like they were getting their money's worth here. There's a lot of content here. This is many hours of content, tons of examples, but always balancing the two. So this is not an SMC course. It is not an Elliott Wave course. It is the only course of its kind that I've seen, and I've looked, that combines the two. I don't see anyone else doing that. So this would be a unique learning experience and a way to learn both at the same time, right? Okay, with that, I'll wish you guys a good weekend. Don't be pissed if there's an email or two that come to promote this, right? We want people to know, right? Okay, guys, with that, I'll wish you a good weekend. As I said, I'm going to do just a couple of alts in a follow-up video, but I didn't want this one to be an hour long. So there you go. All right, guys, have a good weekend. We'll hope to see you in the Discord.